Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is January 23rd, 2019. Tonight I'm going to take a look at cattle, live cattle down here, the ETF COWB, that's COWB. Basically what we have going on with this particular market is that the trend is strong to the upside, short, intermediate, and long-term all point to the upside. We have a technical rating which is still quite positive, but we have a couple of things that are out there. One is we have a seasonal tendency which is going to be a little more bearish short-term for just a short period of time, and just yesterday we had a wave high that was triggering here. So there's a couple of things that are kind of foreshadowing the fact that the market's gotten a little ahead of itself. So a couple things. Let's first look at the energy level, which is always a good clue. And this tells us how strong a market has been. And here's cattle at the very top of the list. So it's been in a really strong trend, and it's been a relentless trend to the upside. And that's when we have the energy level. It's going to show us very, very high. On the contrary, those markets that are down here at the bottom level, they represent markets that are very quiet. So yesterday I talked about wheat being a very quiet market and ready for an explosive move. Well, what's happening with cattle is it's gotten ahead of itself, and it's probably going to go into a slow period, maybe even a little consolidation, just because it's been too strong. And I just want to point this out. So here's cattle and Hang Seng Index. They're both in red. So if we actually pull up the tendencies in an expansion phase, here's cattle, and here's the Hang Seng. The reason they're highlighted is because they're at the top of that list, they having been in the red zone. And I just want to point this out that when we get into these zones for those two markets, you can see that one for cattle, it's only 4.6% of the time, and for the Hang Seng, 4%. It just simply highlights the fact that we don't get into this phase historically all that frequently, and so there's justification for looking at these particular markets. It has gotten ahead of itself. When we actually look at it on a chart, you may not necessarily notice it, but you can see that there's been a trend to the upside. And because of that, I think that we're probably due for this little reversal that we've been underway. The systems are actually hedged themselves right now, and I'll get into that. But because we got ahead of itself, this little reversal is legit. And so what we have to do is we have to go back in time. Here is a support resistance level, this 50, very strong. Go all the way across. You can see that yesterday we broke below it. Today we went back and touched it, and that level, the specific level that we're talking about, is 125.77. and so what we want to do is watch that level. And so the high of today's action was kind of coming back up and retesting it. One of two things are going to happen. We're going to get a close above that level, and then the market might continue to rally, or, and you'll see from the seasonal tendencies that I think that we're probably going to reverse a little bit, that this lower level is going to probably come into play. That lower level is 123.25, and so that is the level that you're going to want to be looking at, and it happens to coincide as this yellow line, the 50-day moving average, continues to head higher. It's going to intersect with that, and that's where the market theoretically could fall. Here is this gray line that represents the 200-day moving average, and it's actually hidden because it's right below and talking and staying at this particular level right through here, which is major support. Not suggesting it's going to come to that level anytime soon. It could take a little while, but if we get a breakdown to this level that I just talked about, and we're able to then cross below the 50, it would be a logical conclusion that we're going to probably come down and retest this level. Now, let's go back to the website and really get a feel for what's taking place here, because I'm not looking for doom and gloom for the market to reverse. First thing I want to point out is cattle is on the top 10 list when it comes to all the markets we watch. We're always interested in is that particular market in a seasonally accurate time period? And the answer is yes, because it's on this list. If we take a look at the seasonal tendencies, you'll see that there's actually kind of a sideways action, then a little bit of a choppy upside bias to the market. And you'll see that with the 5-year charts, less data, that there's actually a little bit of a bearish bias and then a bullish bias. And so that leads me to an easy way to look at all of that information for the 5, the 10, the 15-year seasonal information is just to simply pull up the seasonal projection chart. And what you'll see is that with today's action, we'd be looking for a little bit of a sell-off and then a basing around the 28th. Don't use that as an exact date, but you're just simply looking at the fact that there's a little bit of reversal. The market's gotten ahead of itself. I'm talking about the market retracing a little bit, and then there'll be a nice little bias to the upside. From the low point to the high point, we'll be looking at low to high. That's what that represents, 1.25%. So there's a good movement that's going to occur, but we're probably due for a little bit of reversal. That's the upshot of what it is that I'm talking about. Now, when it comes to where the systems are right now, here's cattle and hogs, and the systems are playing it right. They actually are hedged right now. We're long one system and short another. So we're not flat the market. We have two systems that are fighting against one another. Just recently, we went short the market. So we're hedging our long position. And all we're going to be doing is looking for a little bit of a sell-off. Hopefully the seasonal tendencies can start to kick in. That expansion that we're talking about will slow up a little bit and give us a little bit of a breathing room for the market to potentially rally some more. Should that take place, then we would unwind our short position, and then net would be long again. And so right now we're hedged. We've got a nice open position profit given the contracts that are being traded. We're doing pretty well on the short side in hogs right now, net being short one position with a nice little 9,400 profit, 10,600 here in cattle. That there's enough that's going on with those bigger markets that we got a nice open position profit, take a little bit of a breather, and then have that 1.25% pop that we're looking for in cattle after it takes a little bit of a breather here. Last thing I'm going to point out is that I'm sure some of you don't trade cattle, and I just want to point this out. I'm not going to go into a lot of detail here, maybe save this for a different presentation, but we have something called weekly correlation volatility, and this is where we take a look at the underlying market, cattle as an example. Here's cattle, number 4 on the list, and we compare it against all of the other markets, all 40 markets that we have on our list. And what we're looking at is how does the individual market, cattle, compare to all the other markets that are actually out there. And what we're looking for is a consistency to the correlation between the markets, and we want that correlation if at all possible, and it'll be better for us if that is near zero correlation. So we want it to be near zero correlation, meaning that it goes and moves to its its own drumbeat. It's not going to follow suit with everything else. So a near zero correlation is best. And with that near zero correlation, do we have something that is volatile, or does it kind of stay steady? So the higher you are on this list, the more consistent that volatility, that non-correlation, that zero correlation to all of the other markets. So for those of you that are looking for markets to trade, here, cattle, natural gas, cotton, anything that's on the upper end here will have a good non-correlation to other markets you're probably already trading. Net, I've gone through, I've kind of described what's going to take place with what we think is going to take place with cattle. And for those of you that don't necessarily want to trade that particular market, this hopefully, the fact that it's high on this list of low volatility related to other markets from a correlation perspective, hopefully that will get you at least interested, and maybe you want to take a look at that particular market because it's a good market to trade. It's not the most liquid market in comparison to others, but it's still a very good market to trade and incorporate into virtually any type of a portfolio. So we will look at some more markets tomorrow, but let's see what happens with cattle. Waiting for it to retrace perhaps a little bit, or at least get rid of some of that volatility when it comes to that energy, let it slow up a little bit and then have that little pop that we're looking for. And if that's the case, then we'll unwind our short, take advantage of the long, and we'll live to trade another day. Thanks very much, and we will look at some more markets tomorrow. Bye-bye.